Welcome to the Smallcases show. I am your host Anupam Gupta. Exchange traded funds, or ETFs as they're commonly known, have again become a popular topic amongst Indian investors. The underperformance of mutual funds in 2018, the EPFO's continued preference for ETFs, and the finance minister's budget proposal to include ETFs in Section 80C have all led to an increasing interest and demand from investors for ETFs. Today's episode deep dives into ETFs, what exactly they are, why should investors care about it, how can ETFs be used in your portfolios, and much more. To help us understand this better, we have Mr. Sankaran Naren, CIO of ICICI Prudential Mutual Fund, one of India's largest asset management companies. Sankaran, welcome to the show. Let's start with the basic concept. What exactly is an ETF?
So exchange-traded funds have become very popular in the world. As the name suggested, they are traded on the exchange. And the underlying is a fund, and that fund is normally an index. So what happens is we have created in the world many such indexes, and these are actually traded through the exchange. What is the advantage of this is that clearly you are able to trade at any time during the day. Normally when you invest in mutual funds, you get the NAV, which is there, the net asset value, which is there between 3 and 3:30 of the day. There are days when the markets are volatile and the markets can open down or up, as the case may be. The advantage with an ETF is actually you get to trade in them at that point of time in the day, and it's not dependent on the net asset value between 3 and 3:30. So these have become very popular in the world, and most of the time they are low cost. So what happens is you are actually gaining in terms of cost as well, and you're able to invest in the world today. You have wide variety of ETFs, and you have small cap ETF, mid cap ETF, large cap ETFs, you've got sector ETFs, you've got different types of ETFs. And all these type of exchange traded funds are used by investors to invest and disinvest.
So from your perspective, you have mutual funds also and you have ETFs also. So between the two, what would be the main differences from your perspective?
In our view is mutual funds are active, which means that there are times when any fund manager, like I'm a fund manager of many actively managed funds, I take positions in specific stocks, and those stocks I believe will do well in the long run. And those kind of investments are called active managed funds. So for example, at this point of time, I'm invested in many power utility stocks, and I'm invested in many telecom stocks. So the advantage of that is that if power utility and telecom do better than other sectors, those funds will do well. And historically, it has been seen that you can't invest in an actively managed fund and expect to see outperformance in the short run. So what you do is you invest in these funds, and particularly when there are big market dislocations, the purpose of active management is seen. Whereas if you invest in ETFs, the advantage is you can invest for all time periods.
Interesting, right? So there are different types of mutual fund schemes also. Are there different types of ETFs?
Very much. There are many types of ETFs. Like we have got 12 ETFs. So we have got, for example, which is based on the top 100 stocks, that is Nifty 100. There is an ETF which is based on Nifty stocks. Then you've got something called a BSE 500 ETF, which is based on the top 500 stocks of Bombay Stock Exchange. We've got similar ETFs for the banking sector. We've got similar ETFs even for the private sector banking sector. So you know the list of ETFs that are going to be launched in India is going to go up, and there are today interesting type of ETFs. You've got one Nifty low vol ETF. those kind of ETFs are based on the fact that you study the volatility of the stock, and what you have in this nifty low vol ETF are only stocks which have always been lower volatility. So when the market goes down, historically they have gone down lower, and that's why it's called low vol ETF.
So from an asset allocation perspective, how do ETFs work out? Tell us about that.
See, asset allocation can be done through actually actively managed funds. In ETFs, what in the initial years, we used to have only pure equity, pure debt, pure commodity. So what, as part of product innovation, what has happened is we've created these categories called small case ETFs. So the advantage with that is they can actually invest partly in equity ETF, partly in debt ETF, partly in gold ETF, and as the product evolves, you might find newer products where they can actually invest in. So the small case ETF is a good way of practicing asset allocation within the ETF space. Otherwise, typically ETF is based on specific requirements. So for example, we have a BSE 500 ETF which invests in the top 500 stocks. We have large cap, we have mid cap kind of ETFs. Small case ETFs actually give you an opportunity to do asset allocation within the ETF space.
For those of you who aren't familiar with small cases, it's a basket of stocks or ETFs intelligently weighted to reflect an idea, theme or strategy. Small cases are created by SEBI registered professionals and is integrated with leading brokerages. This enables investors to buy multiple stock portfolios in one click. Very interesting, right? So now I've understood the concept of the ETF. What kind of small cases are there from ICICI Prudential?
So actually we have about 12 ETFs, but those are specific asset class based ETFs. So we created 3 small case ETFs. The first one would be ICICI Prudential Diversified Small Case ETF. It invests in gold, it invests in large cap, it invests in mid cap, it can invest in low volatility ETFs, etc. So you get a number of ETFs for a small amount invested. You get to participate in a number of ETFs. So what happens is you are able to do asset allocation with a small sum of money allocated to different categories of ETFs. Then we've got something called ICICI Prudential Smart Small Case. What happens is, in the world, what has happened is over a period of time we have created low vol and value. And at various points of time in the future, we'll have growth, quality, and various types of, I would say, factor-based ETFs. So the advantage of this smart ETF, small case, is it is currently invests in a low volatility ETF and a value ETF. And so you get the benefit of what is called a smart beta ETF. You are able to create it through this route by investing in both low vol and quality. And we expect all these ETFs, more ETFs to come. So what happens is we will be in a position to create small case based on more ETFs as and when they get launched over a period of time. The third would be you got ICICI Prudential Leader Small Case. Here what has been proved historically is that large companies tend to have a benefit of more defense, and I've hardly seen any market correction where small and mid caps actually do much better than large caps. That's how we look at it at this point of time. I think this area is going to evolve. You're going to have more and more innovative products coming up, and those innovative small case products will actually widen the entire base of investors who are investing in the ETF market.
Naren, so this looks like a very evolving field, like you correctly said, and the products that are also going to come up are going to keep evolving over a period of time. So from your perspective, what kind of investors, what's their profile that would be ideal for these small case ETFs?
I would say anyone who is long term and wants to start even in a small way, these are very efficient products even for a small investor. So I would say if I look at the ICICI Prudential Diversified Small Case ETF, we are looking for investors who want to think long term and who are willing to be invested over the long term, over cycles, because that's when they'll get the biggest benefit of the diversified part of the entire small case. On the other hand, if you look at ICICI Prudential smart small case, we are looking for people who are looking for niche investing. You know, people who want to invest in low volatility stocks and value stocks, and they find it difficult to pick them on their own. There's a very interesting way in which, with small amounts of money, you'll be able to create a very interesting basket of low volatility stocks and value stocks. On the other hand, there are a number of people in India who want to invest only in the larger companies, because the larger companies have proved to be delivering long-term returns which are decent. And for them, ICICI Prudential Leader small case would be a very interesting way to invest.
Sure. And finally, looking at the longer term, right, and especially because equities is a longer term asset, how do you see the future of ETFs evolving from here?
Actually, the future of ETF has been written in world history as one of the most successful products. The reality is that, you know, in the world, product innovation has actually been required to make it more and more popular. And frankly, the small case product innovation that we are attempting is a very interesting way to actually popularize the product, given that India has large number of small investors. And for small investors to be able to buy even one share of the top 50 product companies would have been much more difficult. So this becomes an innovative way. Having said that, there are market risks in ETF investing and small case investing, but I don't think that there is any easier way with small sums of money to get a wide diversified portfolio which can actually deliver good investor experience for long-term investors. That's how we look at it. A lot of it is going to happen over the next 10-15 years. We are at the start, and normally in any category, when people invest at the start, they are the gainers, and that's how we look at it.
Naren, thank you so much for explaining ETFs to our viewers. Folks, that's a wrap on the Small Cases show. We hope you found it interesting. You might want to consider ETFs as part of your asset allocation strategy. Our guest today was Sankaran Naren, Chief Investment Officer, ICICI Prudential Mutual Fund. If you want to know more about Small Cases, visit their website www.smallcase.com. Stay tuned for our next episode, where we will get you more investment strategies that'll help you make smarter investment decisions.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.